Well, it's the end of another month, end of November, and time for our monthly chat with Dr. Andrew Wilson to share the latest My Housing Market data for apartments and houses around Australia. There are a couple of surprises in the latest figures, and it clearly shows the resilience of some housing markets around Australia. If you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can keep you updated, because every week we have our Property Insider chats to give you the clues behind the news in our housing markets. Well, looking back over the last year, the beginning of this year, there were so many forecasts about our housing markets. Some predicted interest rates would fall during the year. Others predicted interest rates would rise. Others thought the property market would crash because of the cost of living issues, and yet others even predicted Australia would fall into a recession. Well, now that the property market's almost closed its books for the year, I think it's a good time to have a chat with Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market, to look at the latest statistics for the month of November. Hi, Andrew.
Yeah, good day, Michael. And yes, we're just about done and dusted for 2024. So we can look at today at the latest monthly data, which is for November, and not a lot will change over the next month. And we'll see our 2024. I think we're very close to the same results we had overall in 2023. So yeah, a steady as she goes result in annual house prices. I'm not sure a lot predicted that, Michael, but we've got to understand that, last year, 2023, was a year of recovery. Of course, that followed 2022, where markets were affected by those increases in interest rates, which were the first increases for 10 years. And of course, that had a lot of, as usual, impact on confidence. But once confidence returned to our housing markets, really as a result of a very strong economy continuing, then our markets bounced back 2023, and they regained just about all that they lost in 2022. So I guess 2024 has been a positive year because we've actually built on that recovery and have moved ahead. So yes, another positive, good year in 2024. Although we must say that when we look a little deeper into the results, it's really been a factor of three particularly strong markets, and that's Brisbane, Adelaide, and Perth holding the results where they were last year, and others have continued to be different in the sense that Melbourne's underperformed, but Sydney's been quite solid this year. But of course, when we talk about the national housing market, Michael, there is no such thing as a national house, and we at My Housing Market, we look at the national model as being a national capital city model. So what we do is we look at all the results of the capital cities over 3 months, and then we produce a weighted average based on the volume of activity in each of the capitals. And of course, that means that the larger capital cities contribute mostly to that national house price model. We're talking, of course, Sydney, Melbourne, and Brisbane. So it really is a model that reflects the energy in those larger markets, but nonetheless, it gives us a good sense of, underlying action in our capital city market. So when we look at the results for November, well, we can see it was another good result for the national median house prices, up by 0.6%. Over the 3 months to November. Now that's compared to the 3 months to October. So it's a 3-monthly data set, but it advances month by month. So it allows us to look at that underlying trend on a monthly basis while still modelling a significant number of sales. So up by 0.6%. The new record high national median house price, capital city median house price, is 1,163,921. And it is the 21st monthly increase over the past 22 months, Michael. So some real consistency there. And when we look at the annual result, where the national house price up by 7.1% over the year ending November 2024, very similar to what we had a year ago for an annual increase, and up by 15.1% over the past 2 years. When we drill down into the results, we can see that the smaller Actually, the smaller capitals produced the best monthly results over November compared to October. Darwin and Canberra up 1.7% each. But it was really the Sydney, Brisbane, Adelaide and Perth markets that were responsible for that strong result for the national model. The Perth market, of course, that's been a leader of the major capitals for most of the past year, up by 1.3%. Brisbane up 1%. Sydney up 0.7%. And that Sydney market really has bounced back, Michael, for
Yes, hasn't it?
prices. And I think a lot of that, and we've discussed that in our recent podcasts, has been quite an interesting revival in the higher price sections of the Sydney market. We're talking Northern Beaches, Lower North, Upper North Shore, Eastern Suburbs, Michael, have all been producing some very strong auction clearance rates over the past few weekends. And of course, that's translating into prices growth. So interesting, given that we're moving towards the end of the year, that we're seeing a sort of a revival in higher price sections of the Sydney market. And that's helped to push up prices, as I said, 0.7%, good result there. And that's been a significant contributor to the national price. Brisbane, again, keeps on keeping on, up by 1% and over the month. And as I mentioned, Perth, again, the leader of the major capitals, up by 1.3%. Adelaide up 0.4%, so still growing in Adelaide. But Melbourne, the underperformer, Michael, just really can't get out of the doldrums, that Melbourne market. It was just down by 0.1%, so it wasn't a significant fall by any stretch, but certainly continuing that shallow market energy that we've seen in Melbourne. And just speaking about Melbourne, similar to Sydney, but in the opposite direction, Michael, Melbourne's higher priced markets, inner east, inner city and inner south, have continue to be underperformers. And it's really that part of the market that's been keeping Melbourne market relatively quiet compared to the other major capitals. So quite interesting. It's a sort of an opposite effect to Sydney, whereas budget priced and mid-price areas in Melbourne are continuing to produce quite solid results for sellers. But overall, a good November. Of course, November is the final full month of the spring selling season, Michael. We do tend to see fewer buyers in relation to sellers over November because a lot of buyers have satisfied their demand over the season. And we're seeing that with auction clearance rate, but prices are still certainly holding up. And when we look at those annual results, it really does reinforce how strong the big three have been, Michael. The Perth house prices have increased by 24.4% over the past year. And I think in anybody's language, that is a very, very strong result.
Well, especially if you look at over 2 years, as your chart here shows, that's an amazing result. I guess what that means is some people are now going to have affordability issues, so they're looking to trade backyards for balconies and courtyards, going to units and townhouses. How's the apartment market worked?
Well, it was another positive month for the apartment market as well, Michael. Of course, we've seen a bit more of a volatile result in the apartment market compared to houses, but we've now seen two in a row in terms of monthly increases, up by 0.2% over the November quarter compared to the October quarter. The national median, national weighted average capital city unit price now at 663,202, and that's up by 5.7% compared to November last year. So that's quite a solid result, not as strong as house price increases, national house price increases, but certainly still quite a solid result there, Michael. And as I mentioned, with houses, as with units, we measure a weighted average on capital cities. And of course, Sydney and Melbourne and Brisbane particularly contribute a very high proportion of unit sales. So it is really reflects, the national unit price really does reflect what's happening in those larger capital cities, particularly in relation to units where they contribute that significant proportion. Sydney was up by 0.2% over the month. Brisbane up 2.2%, Michael. Very strong rise in Sydney unit prices over the month, and in Brisbane unit prices over the month. And really, there's no slowing down for that Brisbane unit market. We had You talk about naysayers. There were naysayers a couple of years ago saying that Brisbane would be flooded with unsold units for years to come, and now it's the strongest unit market in the country,
I
and
guess in many ways the market has also matured. Sydney started off with more of us living in units in Sydney, then Melbourne, and Brisbane people seem not to like the apartment lifestyle as much. But boy, that's changed over the last couple of years, hasn't it?
absolutely, and that inner city, higher density living in Brisbane is now, being embraced by significant parts of the population, and developers just can't get enough land, and the government can't approve higher density developments as fast as they'd like to, because the demand is so high. And look, Brisbane does offer a tremendous inner city lifestyle now, because a lot of the infrastructure has followed that demand. And there's a lot of that great, sort of urban inner city lifestyle environment, and which is being embraced wholeheartedly by buyers in Brisbane. But just looking at that, as I said, up by 2.2%. Perth down slightly, well, down 1.1%. Adelaide up 0.4%. Of course, Perth and Adelaide are smaller unit markets. They don't contribute a lot to the national result. But when we look at the annual figures, again, reinforces just how strong Brisbane has been. It's the leading apartment market over the past year, with unit prices up by 26.3%. And similar to Perth in terms of houses, Brisbane unit prices are up by 42.4% over 2 years. That's a really remarkable result, Michael. And, with those who are mentioning, price crashes and need to look at those sort of numbers, and that's the complete opposite. This is really a boom time market there in Brisbane, and similarly in Adelaide and Perth. Although, as I said, they're smaller apartment markets, there's no doubt that demand is strong in those markets, and prices are rising by above 20% in both Adelaide and Perth, similar to Brisbane, and above 30% and nearly at 40% in Adelaide and Perth over the past 2 years. Melbourne, just similar to houses, just a little subdued, down by 0.3% over the month, and over the year down by 1%. So Melbourne's still dragging the chain, looking for some sort of a kick along, some sort of a spark. Perhaps lower interest rates will do that. But certainly the national housing market, the national capital city housing market, for both houses and units, had a very positive result over November. And most capital cities, Michael, reported increases over the month for both houses and units. So no sign of doom and gloom there. And as I said, we will look at around about, I would suggest, when we get the final figures for the year for December, at a very similar result to what we reported in 2023.
I just wanted to remind you that this is not specific investment advice, because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event. So you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. And if we look forward to 2025, the same underlying drivers supporting our housing markets are likely to be there. If nothing else, interest rates will fall at some stage, but probably later than some would have liked. But shortage of supply, increased migration, affordability issues are going to all be driving our markets. Just a couple of days ago, or yesterday actually, at the time of recording this, the headline inflation figure came in, and that came in a little bit lower. And some people are saying, oh, now we're time for a rate cut. I can't see that happening, because the underlying inflation, the one that the Reserve Bank likes, actually crept up just a tiny bit.
Yeah, well, that's the issue, really. I mean, I suppose the media likes a cheap headline, and it really is a cheap headline because the RBA have quite clearly said that it's looking at underlying inflation in terms of its preferred measure for interest rate policy. Unfortunately, underlying inflation kicked up to 3.5% over the year, which is moving in the wrong direction. As we know, the target is 2 to 3% for underlying inflation. The Reserve Bank has quite clearly stated that it needs to have a sustained period with underlying inflation in the middle of that 2 to 3% range. It does prefer the quarterly data set. This, of course, the latest data was the monthly data set for October. So I think we're really quite some way away from an interest rate cut. But unfortunately, we need to see a better result from underlying inflation than what we had over October. And the Reserve Bank has quite clearly said that it doesn't believe that it will get to the middle, consistently to the middle of that target range until 2026, Michael. But I'm not so sure that, changes in interest rates, we all, of course, welcome them, those with mortgages, but they do tend to cause those disruptions in the cycle going forward. And sometimes it can be healthier for housing markets just to find their base in terms of moving through the changes in interest rates. And as you said, moderating any of the affordability changes that come about due to higher or lower interest rates. I think that's what will pull back the Brisbane, Adelaide and Perth markets next year. I think they're going to reach their affordability ceilings. That's why they're growing strongly, Michael, is because their home prices are lower compared to their income levels, which are higher when we look at the other major capitals, Sydney and Melbourne. And that means that, buyers can go to a bank and they can afford to pay more. And when confidence is high and, as you said, supply is low, then that continues to put prices up. But we will get to the point in Brisbane, Adelaide and Perth where those affordability ceilings will kick in because prices will be too high for them to go to the bank and ask for more money without an interest rate cut or a significant increase in wages. But overall, we can say that it's been a positive year, 2024. We're not at the end yet, but we're just about there at the end, Michael. But there's no doubt that the contributors have been clearly Perth, Brisbane and Adelaide. But Sydney's still, clicking along quite nicely and having a bit of an end-of-the-year surge. It's just that Melbourne market that continues to drag the chain. Really, I guess it's cherry ripe for a revival, that Melbourne market, because Melbourne economy is still relatively strong, and affordability is certainly becoming a real positive. And, the value perceptions are not just perceptions anymore in Melbourne. They're a reality. I guess it awaits confidence to start to get that momentum again in that Melbourne market. But all the other major capitals have certainly had a very positive year this year.
Well, we'll be back with our regular Property Insider chats, and so we'll keep up to date with what's happening. Thanks for giving us this information ahead of the others on what's happened for the November housing markets.
Thank you, Michael.